stock market's been a wild ride lately. Strong gains in 2023, mixed results in 2024, and a lot of uncertainty through 2025. Now, investors everywhere are asking the big question: is the market heading for a crash in 2026? Let's break down what's really happening and what the data and experts actually say. The current market situation. As 2025 comes to an end, markets are showing signs of both strength and stress. The S&P 500 and NASDAQ have slowed down after huge runs earlier in the decade. Inflation is cooling, but interest rates are still high. And global tensions, from trade issues to political conflicts, continue to keep investors on edge. Still, major tech and AI companies have helped keep the market surprisingly stable. What could cause a crash? There are a few things that could trigger a downturn in 2026. First, high interest rates. They make borrowing expensive and can slow business growth. Second, record high corporate debt. Companies that borrowed heavily when rates were low could struggle to pay it back. Third, global instability. Slower growth in China and conflicts in Europe could hurt investor confidence. And finally, overvaluation. Some tech and AI stocks are trading far above their real value. If investors lose confidence, a quick correction could follow. Why a crash might not happen. Now, it's not all doom and gloom. Many analysts believe the market will hold steady, maybe even grow. The US economy remains strong, unemployment is low, and consumer spending hasn't slowed much. Corporate profits are still rising, especially in renewable energy, tech, and healthcare. And if inflation keeps falling, central banks could start cutting rates in early 2026, giving markets a fresh boost. What the experts say. So what do the big names think? Goldman Sachs and Morgan Stanley predict a short correction, around 5 to 10%, not a crash. JP Morgan expects a soft landing, meaning slower growth, but no recession. And the International Monetary Fund sees global growth improving in 2026, powered by AI, automation, and stronger consumer demand. In short, volatility, yes. Collapse, not likely. How you can prepare. So what should investors do? Don't panic, and definitely don't try to time the market. Focus on diversification, mix your investments across different sectors. Stick with companies that have solid balance sheets, low debt, and steady cash flow. And keep part of your portfolio in safer assets, like bonds or ETFs, just to balance the risk. So will the stock market crash in 2026? Probably not. Corrections may happen, but the long-term outlook is still strong. Stay informed, stay patient, and invest smart. If you enjoyed this breakdown, hit the like button, subscribe to Knowfay, and let us know in the comments. Do you think 2026 will be the year of growth or a wake-up call for investors?